After a few years in the financial market, this is what I've discovered. Trading is a game of patience. Risk management is the king. Trading strategy is very important, but trading psychology separates losers and winners in the financial market. What's up, guys? Welcome back to the channel. I'm Solomon Wisdom, and today I'll be talking about trading psychology. I know I should have released this video earlier, but anyways, it's not too late, and I hope you get value before the end of today's video. So if you're totally new to this channel, consider subscribing to the channel. You can drop a like on this video and equally drop a comment. So let's jump straight into it. Trading psychology. The truth is, trading psychology is different for everyone. It's a personal journey. It takes time and real work to get your trading psychology together. Trading psychology refers to the study of psychological and emotional factors that can impact the decision of traders and investors in the financial markets. Trading psychology is very complex, but today I'll be talking on emotions and mindsets. So one of the key factors in trading psychology is understanding the emotions that traders and investors experience. Emotions such as fear, greed, and hope. These emotions can impact decision making and lead to taking wrong decisions or taking wrong actions when you find yourself in a problem, or taking wrong decisions in order to solve a problem. In the next video, I might talk about how to deal with fear, because a lot of traders, they still struggle to deal with fear. So in the next video, I might talk about that. Okay. Another key element of trading psychology is having the right mindset, which refers to being in the right state of mind and having the right attitude to approach the markets. Having a positive mindset can help traders stay focused and maintain discipline. Trading psychology is an important aspect for any trader, both novice and experienced traders. Okay. Understanding the psychological factors that can impact trading decisions can help traders to develop a more effective trading strategy and to manage their risks effectively. So in this video, I'll be giving you tips on how to be on the right mindset to approach the market and how to control your emotions when you find yourself in trouble, okay? Or when you're trading in the financial market. Tips on how to be on the right mindset and tips on how to control your emotions, because you should be the one controlling your emotions. You shouldn't let your emotions control you, okay? So I'll be giving you 10 different tips today. So the last tip is very important, and that tip is very special to me. I know you wouldn't like to miss the last one. So the very first thing you should keep in mind and understand is that trading is risky and you can lose money anytime. If you want to swim, you should be ready to get wet, okay? If you want to trade, you should be ready to lose money. We take risks to make more money in the financial market. We take less risks to make more, okay? We take smaller risks to make bigger money in the financial market. We risk less to make more. Even with the best strategy, you can still lose money in the financial market. When you understand this will keep you on the right mindset. Each time you approach the market, you understand that anything can happen and nothing is certain in the market. No matter how careful you are, no matter how careful you try to be in the financial market, once you understand that trading is risky and you can lose money anytime, this will put you on the right mindset to always approach the market with the mindset that nothing is certain in the market and anything can happen. Okay. Another important factor here is only deposit money you can afford to lose. And this is where a lot of people get it wrong. To be on the right mindset while trading in the financial market, always deposit money you can afford to lose. I see a lot of African brothers depositing their life savings. No matter how skilled you are, once you deposit your life savings, I'm telling you the truth, it's going to be very, very hard to grow that trading account. I see some people, maybe $500 is their life savings, and you see them depositing the whole $500 into their trading account. Let me tell you the truth. Once you deposit your life savings into your trading account, to grow that account will be very hard for you, because you find it hard to follow your trading plan. Let's say in a situation you enter a trade and you see price retracing or reading you a small loss, you see red on your trading platform. I'm telling you, you will rush to close that trade, because what you deposited in your account is your life savings and you are not ready to lose that. If you lose that, that's all you have and you will start afresh again. So don't risk your life savings, or don't deposit money you can't afford to lose. If you have something like $500 your life savings, you can go ahead and deposit $100, okay? Deposit maybe part of your funds, part of the money you have. I'm telling you the truth, you'll be on the right mindset. You accept anything that is going to happen, but when you deposit it all, you'll be afraid to lose trades, and this will make you to take wrong decisions while taking your trades. Another important thing you should keep in mind is don't risk it all on a single trade. And this is another important thing you should understand. Don't risk it all. When you fund your trading account, don't risk all your money in a single trade. When you risk it all, you are gambling, okay? Let me tell you a simple thing. If you can grow a $50 account into $1,000 account within few weeks or within few months, I'm telling you the truth, you are better than someone who flip $200 into $1,000 in a single day. You're better than that person, okay? So don't risk it all in a single trade, because anything can happen. You can lose your money. Remember, the first tip I said that trading is risky and you can lose money anytime. So don't risk it all in a single trade, because you might lose that money while trying to flip your account in a single trade, okay? So don't risk it all. So the fourth thing we'll be considering is accept you are wrong, okay? Always accept you are wrong. Don't blame anybody for being wrong. When you lose money or when you don't get it right in the market, accept you're wrong. I see a lot of people saying that the brokers are hunting their stops. There are good brokers out there and we equally have brokers, but there are no brokers that is hunting your stop loss, okay? You need to improve on how you place your stop loss, on where you place your stop loss. No broker is after your stop loss. When you do anything wrong in the market, accept that you are wrong and accept the loss, okay? Accept that you are wrong, make peace with your mind and move on. Another thing I want you to keep in mind is that accept that you can do everything right and still lose, okay? I'm telling you, you can analyze the market right, you can read the market, read the news, and do everything perfectly and still lose a trade. I made this post on my Facebook page. I say that you can do everything right and still lose, and someone was saying it's not possible to do everything right and still lose. What came into my mind was maybe this person is not a trader, because if you're a trader, you will understand that you can do everything right and still lose. I've been in a situation countless times where I find a clean setup, I analyze the markets cleanly, and the setup is perfect. I even go as far as reading the news to make sure that there is no news coming when I will take the trade. After that, I still find myself losing the trade, okay? And I accept that because I already understand that I can do everything right and lose the trade, and I can equally lose money, okay? The setup can look so good and still fail. Is every other block going to hold price? The answer is capital no. Is every support and resistance going to hold price? No. Is the price always going to reverse when it's at overbought? No. It's not always going to happen, okay? Nothing is certain in the market. So don't panic when you see a clean setup and it fail, okay? It doesn't make the strategy bad. It doesn't mean that your strategy is bad. It's just the market doing its thing, okay? That's just the way it is. Accept it and move on. Be on the right mindset always. Expect anything from the market, okay? Don't babysit your trade. And when I started trading newly, this was one of the things I was struggling with. I always babysit my trade. I always look at my trade without taking my eyes off. I would like to see my trade the way it moves from my entry point to my take profits. If you enter a trade, you don't have to watch it till your take profit is hit, okay? You might be tempted to close before price hit your targets. Sometimes when you see little retracements, you get afraid and you might close your trade. What I want you to do for me is when you place your trade, you close your platform, move away from your screen for a few hours, then you can come back and check your trade. Because in some cases, when you enter a trade, you might be looking at that trade, price won't be moving at all. You see price just ranging after you must have entered your trade. We do see things like that. What I need you to do is to move away from your screen, because those kind of movements do play with your emotions, okay? Those kind of movements are one of the tricks the market use to push traders in closing their trades early. This is what I want you to do for me. When you see your edge in the market, place your trade, set your stop loss and your take profits. Move away from your screen. When you do this for 15 to 20 different trades, you will see results. When you see your edge appears in the market, take the trade, place your take profits, place your stop loss based on your rules, then focus on the next trade. As simple as that. Another thing I want you to do is have an edge, okay? Have an edge in the market. I see a lot of people, they just come to YouTube, watch free videos here, watch strategies. Some come to my channel, watch where I teach that price reverse to the downside when it comes to a supply zone and price moves to the upside after it retreats back to our demand zone. Yes, the strategy works, but if you don't have an edge, if you don't practice the strategy, backtest it and build confidence on that strategy, I'm telling you the truth, when you enter a trade with that strategy, you won't feel comfortable, you'll be afraid. So always build confidence in the market, have an edge, know what you see before you take a trade, okay? Make sure you have an edge in the market. And another thing, you should understand that there is no best strategy, okay? A lot of people come asking me, what's the best strategy? What's the best strategy to use? There is no best strategy. Once you understand how to be on the right mindset, how to control emotions, how to manage your risk. With any strategy, you can make it in the financial markets. I'm telling you the truth. There is no holy grail, okay? So any trader that is always showing you profits each time, is always showing you profits, that trader should be questioned. Everyone lose money in the financial markets. That's what I want to tell you. Another quick thing you should keep in mind is the lower your win rate, the higher risk to reward you need. And the higher the risk to reward, the difficult it is for price to hit your targets. I hope you understand what I said. I said the lower your win rate, that is the lower your win percentage, the higher risk to reward you need. And the higher risk to reward you need, the difficult it is for price to hit your target. So what does this mean? Let's say your win rate is about 30%. After every month, your win rate is 30%. Your losing rate is 70%. Will you start using 1:2 risk to reward ratio? You're not gonna be profitable at the end of the month. What you should do is you should use like 1:4 risk to reward, because with 30% win rate, you have to use a higher risk to reward ratio to make more money in the financial market. If your win rate is 30%, look for a risk to reward ratio like 1:4, 1:5 and above, okay? You'll be profitable at the end of each month. Your losing rate is very high, okay? So another important statement I made here is that the higher your risk to reward, the more difficult it is for price to hit your target. So when you increase your risk to reward, that's more difficult it is for price to hit your targets, because price will always hit 1:2 very quickly, 1:3 very quickly. But if you're using 1:7, price will always find it more difficult to hit your target. So use a favorable risk to reward ratio for each trade. Personally, I like using 1:4 risk to reward. There was a particular trade I hit about 1:20 something risk to reward, and it was a crazy trade. Okay, with the strategy I use, I get crazy risk to reward ratio. I have a very low win rate. That's why I use a high risk to reward ratio. I use 1:4. I know it's not too high, but at least it's okay. In some cases, I do make more. Okay, so use a favorable risk to reward ratio. Another important thing you should keep in mind is that you should avoid competition. Okay, avoid competition of any type. Avoid forex influencers. Okay, all these traders you see on the media showcasing their wealth and what they have made so far in the market. I know in some cases it might be motivation for you to do more, but what I want to tell you is don't let it get into your head. Avoid competition and avoid watching influencers too much, because they might put unnecessary pressure on you, and it might lead you into trading with emotions, into taking wrong trades, into trying to be greedy to flip your account with a single trade, or trying to make it quickly in the market. Okay, in trading it takes a lot of commitment and a lot of years to make it in the financial market. So what I want to tell you is to avoid competition. Competition will put pressure on your body, and it might lead you into blowing up your trading accounts. In conclusion, what I'm saying is that avoid competition and avoid forex influencers. The last thing I'll be considering today, remember I said this tip is very special to me. This is my best tip. And what is that? The tip is this: always pay yourself as the market makes money available. Okay, I said always pay yourself as the market makes money available. And what do I mean by this? This is of two types. The first one is securing few profits while you are in a trade. Okay, this one is you should secure few profits when price starts to give you a little profit in the market. When you see yourself making little profits in the market, try to pay yourself. Okay, how I do this personally is once price starts to give me profit and I see a favorable zone where I can put my stop loss, I just move my stop loss firstly to secure my capital so I don't lose the trade anymore. Okay, secondly, what I do is once price hits my 1:4 risk to reward, I close few profits and I hold the remaining trades. Okay, that's the way I do it personally. I try to pay myself very early. I try to secure few profits. And the second way you can pay yourself once price make money available is withdrawing money from your trading account. Try to withdraw money from your trading account. There is a feeling when you secure profits and when you win a trade, there is a feeling that comes with that, and there is a special feeling. Okay, this feeling is very, very, very special. There is a special feeling you get when you withdraw money from your trading account into your bank account. That feeling is so special. Okay, so always try to pay yourself, because when you pay yourself, it creates the sense of profiting as a trader. Okay, you feel it. Oh, I'm a profitable trader. I make profits and I enjoy my money as a trader. So what I want to tell you is always try to withdraw. If I'm not saying you should withdraw every money in your trading account, no, try to pay yourself, because no matter what you're passing through, when you withdraw money from your trading account and you see it in your bank account, there is a special feelings and there is a motivation that comes with it. It tells you that you're doing well in the financial market. So this is my best tip. Like I said, always pay yourself as the market makes money available. So in conclusion, what do I have to tell you? In conclusion, what I want to tell you is, if you want to swim, be ready to get wet. Okay, completely accept every risk. You have to accept every risk as a trader. Accept it. Make peace with your heart and know that success won't come overnight. Okay, if you lose a trade, make peace with your mind. If you make a wrong decision, make peace with your mind, and you should accept that success will not come overnight. And this is all we have for today. Thanks very much for watching. If you're new to the channel, consider subscribing to the channel. I'm Solomon Wisdom, and see you in the next one.